Hello and good afternoon. I'm Rachel reporting live from Kalkine Studios and you're watching the Mid-Market Pulse. Now, Australian shares were trading near a day's high by mid-session, boosted by optimism that the Omicron variant of COVID-19 poses less risk than initially thought. The market sentiment was also lifted after the US consumer price gains in November met expectations, which eased pressure on the Federal Reserve to speed up bond tapering process. By afternoon trade, the ASX 200 index was up 60.7 points or 0.83% at 7,414.2. The benchmark index did open higher today following a strong session on Wall Street last Friday. On Wall Street, all three major US benchmarks closed higher, with the S&P 500 hitting its fresh closing high. The market surged even after the latest economic data showed inflation rose to an almost 40-year high. The S&P 500 ended 0.96% higher, while the Dow Jones rose 0.61%. The Nasdaq Composite gained 0.73%. Back home and on the sectoral front, all 11 sectors were flashing in the green, led by property and energy indices. A-REITs and the energy sector gained almost 1.9% each by mid-session, followed by materials, which surged 1.4%. Among others, financials, utilities, telecom, consumer staples, tech, industrials and healthcare traded higher with marginal gains. Now let's take a short break here. I'll be back very soon with the top gainers and losers by the mid-session trade.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
And welcome back to the Mid-Market Pulse. I'm Rachel Jones and you're watching Kalkine TV. Now, the top gainer on the ASX so far today is real estate business Charter Hall, which their shares surged 4.5% by mid-session. Some of the other notable gainers were gold producer St Barbara, lithium miner Pilbara Minerals, diversified financial business Net Wealth Group and resource company Iluka Resources. On the losing side, automotive parts distributor G.U.D Holdings topped the chart with a 3.7% loss. The other top laggards were Insurance Business Insurance Australia and QBE Insurance Group. They're followed by resource company Lynas Rare Earths and corporate bookmaker PointsBet Holdings. Moving on to companies in the news today, and shares of the world's largest commercial explosives provider, Orica, their shares trading 0.3% higher after they announced the sale of Minova business to a European investment firm called the Aurelius Group. The company said that it had entered into an agreement to sell Minova business to Aurelius for $180 million. The deal is expected to close in the first quarter of 2022, subject to regulatory approvals and other customary closing conditions. Managing Director and CEO Sanjeev Gandhi said the sale allows the company to focus on its four key business verticals of growth. They are mining, quarry and construction, digital and the mining of chemicals. Moving on, and shares of biotech firm CSL are down so far today, 3.3%. That's after they released clarification on takeover talks with Swiss pharma firm Vifor. They specialise in iron supplements and kidney health products. CSL, however, added there's no certainty that any transaction will result. The shares of Cenex almost jumped 3% so far today after they entered into a deal with Korean steelmaker POSCO. The energy company reported this morning that POSCO will acquire 100% of shares in Cenex for a cash offer price of $4.60 per share. In addition to the cash offer, Cenex intends to pay a dividend of up to 5 cents per share for the half year ending 31st of December in the ordinary course. This dividend will not be conditional on the implementation of the scheme and remains subject to review by the Cenex board at any time. It expects a scheme meeting to occur in March next year, and if approved, the deal is expected to complete in late March. Moving on, in shares of the BHP Group traded 2.5% higher earlier today after they announced the ongoing talks with Wyloo Metals on acquiring Canadian nickel miner Noront Resources have failed. The two sides were unable to reach agreement on Wyloo, which owns 37.5% of Noront, supporting a takeover by BHP. In September, BHP had revised its offer for Noront Resources to 80 cents per share. And shares of Santos gained 1.5% after the stock was listed on the Papua New Guinea's National Stock Exchange today. The shares were listed following approval by the board of the PNGX of Santos's listing application as an exempt foreign entity. The listing relates to its merger with Oil Search, which came into effect on the 10th of December, as we reported here on Kalkine TV. Well, that's all from me for now. Stay tuned to Kalkine for all the latest business news and economy-related news. I'm Rachel, signing off for now.